This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
Yeah, it's funny you asked that. Just last week I was on Reddit looking at a big list of people's favorite quotes, and I made a little note of several of them because I thought they were really good. But one of them was, "Nothing changes if nothing changes," which is like, if you want your life to get better, if you want to start making progress and getting places, something has to change. You can't just keep doing what you've always been doing and expect something better to come about. As simple as that is, I like the power behind that. It's like, I have to change something about myself or my situation or my actions. And I think as humans, that's inherently a difficult thing to do. It's hard to change people. Usually it takes some kind of like event or catastrophe or something to, jolt us awake and be like, oh, I got to change something. But just being keenly aware of that, it's like, you have to get out of your comfort zone and change something if you want to improve your situation. So maybe that.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey, awesome people. Ever wondered how you discovered this show? Was it a tweet? Was it LinkedIn? There's no ads or sponsorships here, just pure passion. So if someone guided you here, do me a favor, pay it forward, share it, review it, spread the word. You rock, and your support is everything. Thanks so much. Hey everyone, it's Augustino. Sourcing profitable real estate deals starts with finding motivated sellers. Knowing where to look and crafting win-win offers is absolutely critical, especially when markets are shifting, especially the way they are today, right? So our next guest knows all about this topic. He is the founder of REtipster. It's a real estate investing education website where he got his start some time ago buying and selling vacant land plots, but now he shares his knowledge with over 50,000 monthly readers. He specializes in creative marketing and building rapport with his sellers and his investors. He has mastered the art of crafting offers that benefits both parties. Now, as sourcing deals becomes tougher and tougher amid the higher interest rates, he's got some valuable insights here that I think is going to be tremendous for you listeners out there. So with all that, I'd like to welcome Seth Williams to the show. Buddy, thanks for coming on, bud.
Hey, Agostino. Great to be here. Thanks for having me back.
You bet. Now, guys, if you like what Seth has to say, you can check out his website at REtipster.com. Okay, Seth, let's dive into how you find the cheap land and motivated sellers.
Yeah, absolutely. Well, there's several different ways to do this. Probably the favorite way that most people learn and kind of get started with is direct mail. And this is something that's kind of changed a bit over the years. I still think it's probably the number one way to learn the business and get started, just in terms of the ease of finding lists of people and crafting a message and, sending them out and that kind of thing. It's a very repeatable, systematizable process. And there's different ways you can field those responses. You can have people call to a call center. You can have people call to the phone in your pocket, which I've never done, but you could do that. Or you could send them to like a pre-recorded voicemail greeting. But really what matters the most with direct mail is getting, the right list of the right people and kind of understanding who you're talking to when you send them these letters. And there's different ways to send these messages. You could send what some people call a blind offer, where you sort of figure out what their property is most likely worth based on the size and the location, and kind of figure out a fraction of what that market value is, and just send out a bunch of these offers that way. Or you can send them like more of a neutral letter, where you're not really sending an offer per se. You're just saying, hey, I see you own land in this market, and I'm looking to buy land in that market. If you want to sell it, give me a call or send me an email or text me at this number. And that's kind of how you get the conversation going. And This has changed a lot over the years because back when I started, there was like nobody else doing this. And when I say back when I started, I mean like back in 2009. It was a very untapped market where a lot of people overlooked it and didn't think about it. And when I sent mail to people and sent them an offer, like I was it. Like nobody else was reaching out to them. So if they didn't take my offer, they weren't going to sell that thing. And it's a very different environment now. There's a lot more people that know about this. A lot more people are sending direct mail. So you have to be a little bit more creative in, what you're saying to these people and how to catch them in a way that they maybe haven't seen it before. Maybe not even using direct mail. I mean, maybe doing something like text messaging or cold calling. For a while there, text messaging was a pretty effective, awesome way to do this. But there's been some new rules and regulations that have come into place that make it a little bit harder than it used to be. So people are sort of going back to the drawing board on that. But I mean, there's also email. There's all kinds of different ways you can reach out to people. But it's really just a matter of understanding, where are these people? How do we get these lists of these motivated sellers who own vacant land and start reaching out to them? So, and I talk about all this stuff over on REtipster.com. So.
Yeah. Well, let's talk a little bit more about that though. So as far as getting a list of motivated sellers, first of all, I think the key here is motivated, because if they're not motivated, I think you're just going to get a whole lot of phone calls and text messages, a whole lot of swearing and negativity. Generally, I think to your point a second ago, it's like before, not necessarily people doing it. Now it seems like there's a lot of people that do this, and to the point where these folks are getting inundated with all kinds of direct mail. And yes, the creativity matters, but before you even get down that far, how do you even find these sorts of people? Because it's different when you're looking for houses, for instance. You're looking for tall grass, maybe it's not maintained. There's certain telltale signs when you're driving for dollars. But with land, it's a little different. So how do you do that how do you find a motivated seller?
Yeah, well, in terms of dealing with people who will call you back all angry and that kind of thing, I don't know of a way to completely avoid that. Like, I think no matter what you do, I mean, unless you truly understand what's going on in a person's head and heart, there's no way to really know how they're going to respond to that. So it's more about like a mindset of when you get those responses, do you let that get to you? Do you let it get you down, or you just kind of, say, oh, well, and move on to the next person. But in terms of like finding people who are more likely to be motivated to sell, I mean, it's almost like you have to take a couple steps back and understand first, like, what property types are you going for in the first place? Like, are you just looking to buy anything that's vacant land, or are you trying to buy desert squares out in the middle of nowhere, basically just, vacant lots that is far away from civilization? Or are you trying to buy like large acreage that you can then subdivide? Because that's a very different type of property with a very different type of purpose. Like most people who buy those types of properties, they're willing to pay a lot more, maybe sometimes even full market value, because their end goal is not to just buy the thing, do nothing, and sell it. Their goal is to buy the thing and subdivide it, or change the zoning, or get it land entitlements, and then start selling it off in different, pieces like that. And it's a very different play. It's basically a different business model altogether, because it's sort of like, I don't want to say it's like a house flip exactly, but sort of in paper, in that you're buying a property, you're putting a lot of work into it, a lot of costs even, to design the thing, get a surveyor out there, create new legal descriptions and record that, get through different county and municipal approvals to get that done. So it's a different process than just buying something, doing nothing, and selling it. And your offer price reflects that different process as well. But if you're willing to go through those steps of doing that, you can kind of play a different game and go after properties that other people either aren't going after at all, or you can make offers that are much more likely to get accepted because other people are making offers for maybe 40% of market value on a property where you're making an offer of 80 to 100% of market value. So you can extract a lot more value out of the mail that you send, because you can make offers and actually get those things done. And it's okay, because you have this plan in place to make it worth a lot more. So you have to understand, what is the size and what am I trying to do with this thing? And once you understand that, that determines a lot about what you're going to say in your mail, what you're going to offer ultimately when you do that, what kind of list you're going to generate and download from your data service if you use one of those. So, yeah. So I guess that's one big thing to consider. But say, for example, if you were just going after straight flips where you're not going to do anything, you're just keeping it simple. In that case, I mean, there's certain ways you can filter your list. Like, for example, In a service like Data Tree or PropStream, you can say, I only want vacant landowners who own land around this size in this county, and I want the property address to be, or I guess I want the person's mailing address to be in a different state than where the property address is located, or even in a different county, just to make sure, like, I'm not buying the vacant lot right next to their house that they see every day. I'm buying a vacant lot that's out of sight, out of mind, that they're much less likely to care about. Just understanding, like, statistically, when we do these deals, what are the circumstances surrounding that? Like, what is the property like relative to that property owner? So, does that make sense?
Yeah, it sure does. I mean, but it sounds to me like there's quite a bit of work that goes into that second part. So the first part, let's get into that. Let's dismantle some of what you just said a second ago here. So first off, defining what your overall strategy is, always super important. What sort of asset you're going to go after? Where's it going to be located? Are you going to do some sort of giant land acquisition, then split it up into smaller pieces? I know guys that do that kind of stuff, and it's very lucrative.
Yeah.
Or you're just targeting specific assets and you're reaching out to the owners. In both cases, I mean, it sounds like there's a great deal of upfront work involved with this, right? Is that accurate? Would you say that's true?
Yeah, it kind of depends. I mean, if I'd say if it's the first time you're ever doing this, absolutely. I know, like, even back when I got started doing this, it took me probably a year of going through this process a few times to really understand it and make it second nature. I mean, that first direct mail campaign I sent out took me weeks of just like, where do I get the list and how do I filter it and what do I say and all this stuff. If you're doing like a subdivide, for example, in a brand new market where you've never done this before, there's a lot of questions you'd want to figure out. Like, can I find, surveyors in this market that are easy to work with and that aren't going to cost a fortune to get the job done and they actually have availability to do this in the near future? Or is this a market where, like, I can't find those people, or it's going to cost a ridiculous amount to get the job done? And also understand, like, there's different types of subdivides. There's major subdivides and minor subdivides, and even exempt subdivides. And what that means is if a property is exempt from any platting requirements, it means that you can basically subdivide this thing and not get anybody's permission to do it. Like, you just chop it up and you do it and nobody's going to ask questions. But if it's a major subdivide that's subject to platting requirements, it's a completely different ballgame. You can make a lot more money from that, but you have to go through all these different approvals. There's a much higher likelihood that people are going to say no to you. Doesn't mean you can't do it, but there's just a lot more involved with that. So, in terms of doing market research, you'd want to understand, okay, what kind of subdivide am I going to have to do here? And what is required to make that happen? Like, how difficult is this going to be? Because if you find out, you basically can't do this without tons of red tape, then that's going to probably severely limit the types of properties you're going after or affect what your budget and timeline is going to be going into it. So again, getting really clear on, like, what exactly am I trying to do? What would my preferred future look like? And what would it take to make that happen?
Yeah. So the strategy is not just what market am I going to go in? The strategy is also, what are the market dynamics? How fast can I unload the asset? What sort of costs are associated with carrying the asset? What sort of costs associated with splitting up the various land parcels? Mm-hmm. What sort of demand might there be in a given area? Maybe that might be a thing too. I heard of, I was at one event and this guy bought, I don't know, some giant, what was it? It was, I don't know, like 10 acres of land or something like that. Mm-hmm. And he paid like $500,000 or less than that, actually, somewhere in a desert. Mm-hmm. Ended up breaking it up into super small pieces and selling the pieces off for like $2,000 each. Mm-hmm. Wow. And I think overall ended up being 1.5 million coming back, so not bad. I mean, it's, but I mean, obviously it takes a great deal of effort and work, upfront work, first of all, to do a deal like that. And then you're going to be sitting on that asset while you're trying to split it up and selling off the various pieces too. So there's a whole lot that comes, that's part of all this, right?
For sure. Yeah. Yeah. And it's, like I mentioned earlier, if you're just going to buy land as it is and do nothing and flip it, like, that's super simple. But if you're going to do this kind of game where you're taking properties and multiplying their value after subdividing them and that kind of thing, it's a lot more work involved, a lot more upfront things to establish before you actually dive into a market. But if you're willing to do that stuff, there's a big advantages too. Like, could probably send out a lot less mail and get more deals accepted. So just kind of have to consider the pros and cons of each approach.
Yeah, yeah. So these days, right now, interest rates are sky high. I think that generally speaking, most guys that I know anyway, when they're doing these types of deals, they're using creative financing to put them together, right? I think you're probably using the same sort of thing. So how do you craft a creative win-win offer that a potential seller may want to actually do?
Yeah. Well, again, it kind of depends on what your strategy is. Do you need financing for this kind of purchase? Like a lot of deals that you'll find, for example, if we go down this subdividing track again, if you wanted to split up a property in Arizona, you might be able to buy a 40-acre tract for like, I don't know, $20,000, that kind of thing. If you were to make a discounted offer, that same property in Texas might cost $500,000, depending on where it is in Texas. So for the $500,000, personally, I would need financing for that, either from a bank or figuring out some kind of a seller finance scenario where, there's a mortgage release clause where after we subdivide this thing and after I start selling off child parcels, we can release that portion of the mortgage so that part is free and clear. Whereas if you're just going to buy a 20 grand parcel in Arizona, you can just buy that thing, or I could just buy that thing free and clear. So just kind of depends on what you're going after. I personally haven't gone down that seller financing route yet. I know that's something a lot of people are trying out, which typically hasn't been something I've seen a lot of land investors do until the past year or so, when it's become more of a necessity just because of how big these properties are and how a lot of people are trying to do this subdividing thing. So you could do it that way, or you could even find a bank that's willing to do this kind of financing on vacant land like this. So.
Do you think it's tough these days, considering where we are in the economic cycle, to finance land?
Yeah, I think it's always been hard to finance land. I actually, for the longest time, I didn't know of any banks that would do it ever at all. But as I've learned, when you get into bigger deals, $100,000 and north of that, a lot more banks start becoming interested in that, depending on your own personal net worth and your financial statement and your use for the property. Usually, with most vacant land deals, sub 100 grand, if you don't have an immediate plan to develop that thing into a house or something, then most banks want nothing to do with that. Unless, again, it's worth more and you have some kind of a plan on how are we going to take this property and make it worth more, or make it into a property that's easier for the appraiser to assign a value to. Because just straight vacant land, it's a difficult type of property to appraise. And I think that's ultimately where the problem lies with banks being unwilling to finance it, because they just can't wrap their heads around what is this thing even worth? Like, how do we assign a reliable value to its collateral?
Now, would you say that vacant land can be easier for new investors versus, say, getting into single families? Hey, my amazing Bulletproof Cash Flow tribe. Before we dive back in, I want to express my sincerest gratitude for being a part of this community. Your support is what keeps us going strong. If you've been enjoying the information that we've been sharing here, I have a quick favor to ask. Would you mind subscribing to the show and leaving a review on Apple Music? By taking these small steps, you'll help us continue to deliver exceptional content while expanding our reach to fellow investors just like you. Thanks so much for your unwavering support. And now let's dive back in.
Oh, yeah, for sure. Yeah, I think it's harder today than it was 10 years ago, but it's still easier than houses. Just because, the simplicity of land, how you don't need to kick anybody out. You don't need to get contractors involved for the most part. I guess you could do that kind of stuff if you're going to subdivide it and, develop the thing in some way. But with most straight flips and even subdivides and getting entitlements, there's just a lot fewer moving pieces involved. And I think the hardest thing about land, or maybe the couple hardest things about it that isn't true about houses, is that it's usually harder to appraise vacant land properties, especially if it's like a one-of-a-kind vacant lot and there just literally are no comps and there's no cost approach and there's no income approach. So it's like, what do you do? How do you figure out what this thing is really worth based on data? So that can be kind of a trick. And then also a lot of vacant lots will just take a little bit longer to sell depending on the market, whereas houses typically sell a lot faster.
Yeah. So when you're looking at you define your strategy, you get out your mailers, you're coming up with the plan of what you're going to do with the property, provided that this person wants to potentially sell or not. We don't know yet. Mm-hmm. How do you go about building building that rapport with that individual? Like, let's say, for instance, you're not really sure if they're going to be interested or not. And maybe they call into that number, or they text or whatever.
Mhm.
How do you bridge that gap? Like, what do you do?
Yeah. Well, again, it does depend on what you think your ultimate offer is going to be, which depends on what your strategy is. But in terms of just building rapport, I mean, usually it's just having a normal human conversation with them, understanding, tell me about your property and tell me about your situation, and why are you interested in selling, that kind of thing. Just help me understand, what can I do for you? What kind of needs are you trying to solve here? And some sellers will be really forthcoming about that, some won't. But if you can't understand like what the issue is, why they don't care about the property, or why they bought it in the first place, or what kind of financial problem they're trying to solve in their life, that can give you a lot of insight in terms of how to structure your offer. Like, for example, if a seller is trying to pay for their kids' college tuition or something, if that's really the issue, they don't necessarily need all of their cash right now. I mean, you could say, okay, well, how about a seller financing offer where I can pay you enough to make those tuition payments as they come in, and then you get the tax benefit of not paying the full tax bill right now. Instead, you can pay that as the payments come in. That's one big benefit of having those conversations. A lot of things that land flippers have done historically when sending blind offers, and it's that's a double-edged sword, is they don't have these conversations. I mean, the whole point is to not get on the phone with people. I'm just going to send you an offer and you take it or leave it. And a lot of people don't take it and they don't respond, or if they do respond, they're mad, that kind of thing. The benefit is that land investor doesn't have to spend a whole lot of time getting to the bottom of it. Like, the first piece of communication they have, it says what game they're playing. So they're never leading the person on about, I'm going to pay full market value, when they're not. It just tells them straight up, this is what my offer is going to be. So, depending on your strategy, maybe you're fine with that. If you just have the right expectations that a lot of people are not going to take you up on this stuff, that could work for you, as long as you're okay spending a lot more money on direct mail. But if you want to really, squeeze every last drop of opportunity out of the direct mail dollars you spend, that's when you might want to have more of these, person-to-person conversations and get on the phone with people. And especially if it's a bigger, higher dollar deal where there's a lot more money on the line, it could totally be worth that.
Yeah, I think that's going to be one of those issues is trying to figure out what that seller wants. And you could take the blanket approach, like I said a second ago. Man, I'm just not sure. I wouldn't be sure about doing such a thing. I guess it depends on what the overall strategy is, like I said a second ago, right? Mm-hmm. If you're going to send out 100,000 pieces, maybe you'll get some response from that, or maybe just get a bunch of really nasty phone calls. I think, but it comes down to first defining what your overall strategy is, and then trying to find the individuals or the land or both that fit that bucket, and try to customize the reach out so you can establish some sort of communication and build some rapport. Yeah. Because the cool thing is that, like anything else, they may not be a seller today, but they may be a seller next month or even next year, right? Yeah. And they want your call to be the first one they make.
Yeah, absolutely. Right. Yeah, a lot of times people who are willing to have those conversations, the willingness to build that rapport can really give them an edge. Even if you're making an offer for half of its market value, as well as somebody else who sent a blind offer, the fact that you got on the phone with them, that can go a long way, just in terms of building trust and showing, hey, this is a real person. I've heard lots of stories of that happen. Even sometimes the person willing to get in a call, their offer is a lot less than a blind offer. Like, they still went out just because of that human connection. So.
Yeah. So in the green room, we're talking about how you're now doing, you haven't pivoted or anything else like that, but you're doing other asset classes. You mentioned you're doing self-storage, right? Which is an interesting take. I like self-storage. I don't do any self-storage right now, but I do like it. I know something about that business. So let's talk a little bit about that. Why self-storage? What made you jump into self-storage from where you're doing now? And what's the logic that really drove this new endeavor?
Yeah. Well, for me, self-storage, it's always been a business I've been kind of fascinated by. I think a lot of people are fascinated by it. Every time I talk to somebody, they're like, oh, that's such a brilliant business model. I'm totally going to do that someday. And I was that same kind of person where I thought it was a great idea. And for me, I think there are a bunch of different reasons. I like the fact that from a property management standpoint, it's a lot easier than like an apartment building or a multifamily because nobody's living there, like nobody's sleeping on the property. Um, there's a lot of scalability built into it, which I think this is also true with apartments, that kind of thing. But um, you know, you could take a facility with a couple hundred units in it and raise everybody's rent by $5 a month, and nobody's going to care. Nobody's going to move out, but your facility just went up a lot in value because of that. And also just the cost of building it, the cost of managing it. It just seemed like a good mix of benefits, and it gave me something that I didn't have with vacant land, which was big tax advantages. Actually, I shouldn't say that. There's not no tax advantages, but the depreciation write-off, like that's not a thing with vacant land, and I wanted more of that. After paying a lot of big tax bills, I was like, you know what, this isn't fun. Like I need something to help with this. So that's hopefully going to be a nice thing going forward. And I just spent the past 2 years building my first self-storage facility. It went live back in August, I think, was when we had our grand opening. And it's about 25% full now. And yeah, it's been a lot of fun just to learn that business and figure out the development side of it, which is the first time I've ever built anything. I never thought I was ever going to do that. I like the simplicity of land for a reason. So even looking back on it, I'm kind of surprised I did this, but I was able to document the journey really well with a series of YouTube videos, and that was a lot of fun to work on. And yeah, I'm hoping to continue doing more of these, and I'm interested to see how the market is going to shift. It's part of the reason I built something at all was because I couldn't find any deals on existing facilities to buy. I think that's usually the smarter way to do this is just buy something that's already there, but I couldn't find anything. So I was like, I could build this thing and make a few videos out of it. So let's do it. And it was definitely an adventure, but I think that is probably going to be shifting in the days and months ahead, just as interest rates are starting to reset for people. I have a feeling we'll find more motivated sellers of storage facilities in the months to come.
Are you, I'm assuming for this new build out, then it's all modernized, right? Like it's all kiosk based, nobody there on site, that type of scenario, or what?
Yeah, there's actually not a kiosk at all.
Yeah.
But otherwise, yeah, there's nobody on site. People can rent with a QR code. There's a little sign at the driveway when they pull in. That QR code, it takes them to our website where they can rent online and fill out all their information on their phone, upload a picture of their driver's license and fill out their details, and it gives them a little gate code, and they go in, and it's pretty easy. I don't even do the property management myself. My partner does that, but I don't think it's that difficult. I don't think they get a lot of calls from confused people who don't understand how to do it. It just kind of works. So.
Yeah. No, it's a beautiful business, and just to offer the listeners a little background here. In the self-storage days of old, so to speak, you would walk in, there'd be someone at the counter, you would have to give them your information, they would fill it all out, print off a piece of paper, you sign it, they hand you a lock, or maybe you have to buy a lock, or you have to, they walk you over to the unit, they present the unit, and typically that individual lives up on site. They live usually above where the office is, so it's usually like a mixed use type scenario, usually. So the individual that's actually renting out running the property actually lives on site usually, right? Yeah. In exchange for maybe, plus a small base rent, in exchange for just doing the work, right? Management basically. So this new model, the way you did it, I mean, it sounds tremendous. I do like that idea. I mean, I'm sure that, the technology there is tremendous, I would imagine, right? And it makes for a very automated type of experience for the individual that's going to rent one of the units, right?
Yeah, I think this software thing is part of what has made self-storage kind of boom a little bit over the past 5 years. Because you're right. I mean, prior to that, it was kind of a hassle. You needed a lot more human involvement, and people mailing in checks and stuff, or paying cash. I mean, it was just. With software, it's so much easier. I mean, it's so much more scalable. People can, sign up with their credit card, and the payments are just auto taken from their account. And just a lot of stuff eliminates human involvement in this. And yeah, I mean, building a new facility today, I mean, I guess I can see some benefits to having a person on site if you're like selling boxes, and I don't know, it might give people a sense of security just to have a person there. But for a lot of applications, you really don't need people there anymore, which is really awesome for the business owner.
Yeah. Yeah. I think that one of the key things, though, is understanding where to build one of these things. That's probably the biggest risk, right? It's like in development, for instance, we're doing urban infill. So that in our case, I try to de-risk the amount of de-risk the deal as much as I possibly can by building where there's already people. Yeah. And that's how I do it when I'm developing stuff. But in your case, how do you get comfortable building out 100-unit self-storage? Yeah. Do you partner up with somebody else? Does somebody else perform all the analytics to figure that out? Like, how does that part work?
Yeah, no, it's a great question. Yeah, I mean, the location is a huge deal. It's actually not that difficult to figure out where to do it. There's software out there that tells you pretty clearly what the existing square feet per capita, so how many square feet of storage there is per person in a given area. And usually, I don't know that this is like a magic formula, but the conventional knowledge is, the average ratio is about 7, maybe 8 square feet per person in a given market. So if you can find that or lower, that's an indication that, hey, this place could probably absorb a new facility because that's lower than the national average. So that part is not that hard to figure out. But what's harder is, okay, now I know the general area where I could do this, but how do I find a site where I could add one? How do I find a lot that's priced right with the right development potential and the right zoning and buy the thing, go through all the risk of building it? And what if the whole market changes while I'm doing that? And so that's a bit more challenging. And even once you do have it all done, I mean, who's to say somebody doesn't build one next door to you? And now the whole market is totally screwed up because your pricing isn't, the supply and demand is not the same as what it used to be. And I've heard plenty of stories of that happening. And surprisingly, it doesn't necessarily spell disaster. It just means that your facility might take a little bit longer to fill up than it otherwise would have. But it seems to be that in a normal market, a lot of these things will fill up and stay pretty full long term because it's kind of a hassle to fill up a unit with all your stuff and then to empty it all out and move it somewhere else. It's just kind of a pain. And that's kind of the beauty of self-storage is that people kind of get pregnant with these units and they are sort of stuck with them. I mean, they're not really. They could abandon it or get rid of it whenever they want. Sometimes that happens, but when they look at the monthly cost of paying $70 a month for a storage unit, it's like, okay, let's just do another month, that kind of thing. So I think the weird thing right now we're seeing in self-storage is with interest rates so high, people are not moving as much as they were. And people moving is a big generator of demand for self-storage. So, we're seeing that when we had a feasibility study done, I paid $6,300 for a feasibility study where they looked at the market where I was planning to build and figured out the costs and predicted how long it would take to fill up and all this stuff. It was a great set of information. But when they did that in early 2021, the market looked very different then than it does today. So they predicted that the facility was going to break even within 6 months. And that's definitely not happening because things are a lot slower now than they were back then. And I think that's one of the just general risks with any kind of development is, it took me a couple of years to do this thing. From the day I decided to buy the property to the day it opened, it was basically 2 years. And the world can change a lot in that time frame.
Oh, yeah. It's a lot of work, too. You have to get the city involved. You have to get, you have to start your marketing. I mean, it's a whole thing. It's a whole thing, right?
You probably know all about that, right?
It's very, very different than multifamily. Yeah, it's very different than multifamily for sure. Yeah. But you don't have the same sort of hurdles that you have with multifamily. You don't have to deal with the tenants, so to speak, right? The tenants have a great deal of protections when it comes to housing, which don't exist on a self-storage type of deal, right? So it makes for a very attractive way to get passive income while just managing a storage unit. But and it's also very sticky, like you said a second ago. It's very, very sticky. If it's under $100, people would rather keep paying the money rather than dumping it and then doing one of those auctions or whatever, and then that's it. So it really is a great business. That's one of the reasons why I do like that business. So kudos to you for getting into that, man. It's great. Thanks. It's super. So good. Well, hey, listen, we covered a few things here today. What sort of bulletproof advice would you have to offer someone listening right now that's kind of like maybe on the fence to maybe getting into land, for instance? What sort of bulletproof advice would you have to offer that individual? Having a blast so far? You're ready to jump into real estate? Visit bulletproofcashflow.com for free resources and as well as some masterminds there for you to take a look at. Unleash your potential. Go ahead and check it out now.
Yeah, it's funny you asked that. Just last week, I was on Reddit looking at a big list of people's favorite quotes, and I made a little note of several of them because I thought they were really good. But one of them was, "Nothing changes if nothing changes," which is like, if you want your life to get better, if you want to start making progress and getting places, something has to change. You can't just keep doing what you've always been doing and expect something better to come about. As simple as that is, I like the power behind that. It's like, I have to change something about myself or my situation or my actions. And I think as humans, that's inherently a difficult thing to do. It's hard to change people. Usually it takes some kind of like event or catastrophe or something to, jolt us awake and be like, oh, I got to change something. But just being keenly aware of that, it's like, you have to get out of your comfort zone and change something if you want to improve your situation. So maybe that.
Yeah, no, love it. I think that once people get stuck in their rut, they just keep doing the same thing over and over and over again, expecting something to change, and it doesn't. The change comes from here, your mind, and then you have to make it turn into action. So
absolutely.
Awesome. Great. All right, guys. Well, focusing on making great deals for the individuals that are out there, building rapport, crafting creative offers, doing all those things can help you find great deals out there. And if you're doing the land thing right now, definitely check out REtipster.com. Okay. Seth's got a bunch of stuff on his website. Definitely go check that out. And listen, we talked a little bit about the self-storage business. If you're interested in that, reach out to Seth too. I think that maybe working with an experienced guy who's done this might be a good way for you to enter that side of the market as well. Thanks for tuning in, guys, and I'll see you in the next episode. Take care.